idea to name your company a bad idea, but that's the name of
Yeah.
their company.
See, here's the thing. It could go, it's an extreme, is what it is. It could go
Yeah,
both ways, right? So
yeah.
either it's a horrible idea that you set your business up to fail by putting like it into the atmosphere of, hey, this is a terrible idea, right?
Yeah.
Or it's a completely genius idea because they know
Hmm.
that, hey, this is going to be awesome, but some of the people who won't do the research
Yeah.
won't know. So,
I like that framing.
mhm.
I really do.
All right.
But without further ado, let's just go ahead and jump into it before we make our transition. Hello to everyone who's tuning in live.
Yes.
Right now, we're going to jump into reviewing our deal of the day,
Mhm.
which is bad idea. So let me go ahead and share now. All right. So this is actually the first time we're doing this live,
Oh, yeah.
reviewing a deal together with others watching. But I think we're going to do a lot more of this, and we really want to help others, one, see our process and how we just think about reviewing deals, but then also our community can submit deals that they're looking at or that they want us to provide our thoughts around. Of course, none of this is investment advice. Everyone should know all investments involve risks, and you should not invest more than you're willing to lose.
Mhm.
With that disclosure being said, B,
Free, free gems from Gary. Free gems from Gary. I like it.
that was free. That was free.
Yeah, but also as another disclaimer with these, right? I always like to say that breakfast is
Come on
feedback
now.
is the breakfast of champions.
Ooh,
Got that from Jim Quick.
mm,
So if you do like this, if you do enjoy the content, let us know. We shall
absolutely.
do more.
Absolutely. Can you say that one more time, please?
Yes, that feedback
Mm,
is the breakfast of champions.
mm.
So if you like the content, you like what we're doing over here, say so. Or we live to serve over here, don't
We do live to serve. Truth and service is how we roll at
we?
Bison Venture Partners. Um, but no, I love that. Yeah, I've heard that feedback is a gift.
Mm-hmm.
That's my favorite one to use. So it is the holidays, and we appreciate all gifts that are sent our way. Without further ado, let's go ahead and jump into it. So B, this is Bad Idea.
Okay.
The company is called Bad Idea. They're raising on Wefunder,
Mm-hmm.
and on Wefunder, anyone can invest in startups and small businesses. So as you know, we recently, just at the end of this year, closed our first community round. We raised on Wefunder as Bison Venture Partners. Yes, sir. Yes, sir. And anyone could invest for as little as $100. So we also use these platforms to build our own personal investment portfolios, right? So we're taking time just to review different deals that we find that we think are interesting. This is not an advertisement for this company, right? We're just simply providing our thoughts and providing just some guidance on how maybe you can review deals moving forward. So there's a chance that we don't even invest in this company, but we'd like to look and see what's out there.
Got you. Gary, do you mind if I play the role as a entry level investor not knowing what to do?
Perfect.
All
Yes, please.
right. Cool. So what I would need from you, sir, what are the first like key things if you had to give people like 3 to 5 things to look at when they first look at a deal, what would it be?
Yeah, great question. So this is a campaign page, right? So pretty much every investment campaign, or literally every investment campaign that is on WeFunder or any other website like Republic or Start Engine is going to be laid out in this way.
Mhm.
And the company is required to provide you with certain information so that you can make an informed decision on whether or not you should invest. So that being said, typically when you land on a campaign, you're going to see this big graphic here. And most campaigns are actually going to place a video where the video is going to be like a pitch from the founder, like introducing themselves,
Mhm.
walking through their pitch deck, right? And giving you some context about the business. And then you can start to scroll from there and learn more information. But typically I'm looking for the video first. And this company actually does not have a video.
Mhm.
it just has this graphic here. So that's one thing that's a bit off to me, right? That's off to me.
Okay.
But
Already 0 for 1 for bad idea.
but they've already redeemed themselves
Yeah.
because on the right side you see how much they've raised, right? Like
Yeah.
that's typically what you're really looking for
Okay.
next,
1 and
right?
1.
And they've raised $448,750
Yeah.
from some number of people,
Mhm.
right? Um, that is a number that I'm looking at, right? I want to see how much have they raised to date,
Mhm.
and if they've raised a significant amount, which this is absolutely a significant amount,
Mhm.
that tells me that okay, people are interested in this deal, and maybe I should learn more. Like, what am I missing, right?
Yeah.
If the company had like $1,000 committed to their round, I wouldn't be as compelled to keep searching, right? But when I see a big number like this, a big amount that's been raised already, I'm like,
Mhm.
okay, cool. They raised this amount. They're very close to their goal. Um, and they are closing soon. So they're actually closing this campaign on December 23rd.
Got it.
So you see this sort of this countdown. So it's like, all right, I have 8 days to make my decision on whether or
Mhm.
not I want to invest in this company. So um, I look for that for sure.
Okay.
Next thing I'm looking at, typically it will tell you how many investors have helped them raise this amount.
Ah,
It
gotcha.
does not show that here.
Mhm.
And that might be because this countdown ticker has
Mm.
popped up, right? This doesn't show all the time. This only shows when there's like maybe 10 days left on the campaign.
Got it.
So I am curious to know how many investors they have because I would assume it's a lot of people, but
Mhm.
sometimes you'll see a company that's raised a bunch of money and they've raised it from like 12 people, and then you're like, oh, okay, they've got like significant like angel investors, like wealthy individuals putting up a lot of money, or maybe some kind of like institutional backing that's counted.
Mhm.
But if they've raised this much money from like small dollar investors, if it was like they raised this from 1,000 people or whatever,
Yeah.
I would be like, okay, like they have a solid community or they're really good at marketing. I don't know what it is just yet, but they're
Yeah.
really good at telling their story and getting people to buy in.
Okay. With that being said, which one gives you more of the feel good that this is a good deal to invest in, right? Is it a bunch of money through a small number of people? Is it a bunch of money through a large number of people? What
I
would you
like I,
feel
I
most comfortable with?
I like these platforms because they give power to the people, right?
Hmm.
Like, you can tap your community to be an investor in your success. So
Yeah,
I prefer to see a large amount raised from a large amount of people.
got it.
But if the company has raised a lot of money from a small number of people, like look at who those investors are, right? Like look
Yeah.
at their credibility, look at their background. Like you can actually, this is basically a social platform, and you can actually see who their lead investor is if you scroll down here on the
Hmm.
right side, right? So this person here, see, invested 200,000 in this round. So this is one person
Yeah.
saying they believe in this company that much.
Mm.
So that gives me some
Mm.
some thoughts. It's like,
I was
okay,
about to say.
yeah, I'm like, it's not necessarily gonna make me be like, okay, I have to be in, but
Yeah.
I'm like, wow, if this person is willing to put in that much money, first of all, who is this person? What do they
Yeah.
do?
Yeah.
And then, but then, yeah, let me learn some more, because if they're willing to part with that much money, they must see something that tells them that this could be a lucrative endeavor.
Yes.
Now, the
Everybody needs an Edward in their life.
absolutely, absolutely. Yes, sir. Edward, if you are watching this, we would love to have a word
Hey,
as well.
what's up?
We would be willing to open another investment round if you'd be willing to lead for Bison Venture Partners.
Hey,
Um,
don't say
all
we
right.
didn't ask.
No, you can't say that. So, okay. So another thing, and really where I'm at now is like, I want to know what the terms are,
Hmm.
right? Like, I'm sitting here drinking my coffee from BVP Coffee Co.
Hey.
It's late at night, but I'm drinking the Bison Breakfast Blend. Our
Okay.
signature roast, premium roasted, fresh to order, delivered
Oh,
straight to your door.
let them know.
Brief commercial break. But, the mug says, pay me in equity.
Purchased one myself.
And we appreciate your patronage, my
Oh,
brother.
yeah. You gotta
Pay
you
me
gotta
in
support your
equity.
own, man.
Got to support your own. Now, for all of our Bison Venture Partners investors tuning in,
Mm.
every mug we sell is contributing to your return on investment.
Mm.
So if you haven't gotten one, get yours and spread the word. But that being said, that's the motto, right? Pay me in equity. So
Yeah.
I am looking for deals where I can own equity in the business for the most part. But then you may also see deals where you can basically lend money to the company through debt, right?
Okay.
So you don't get equity, you don't get ownership in the business, but the company's going to pay you back, some amount. We have to look at the specifics of the terms,
Mm.
but there is a return on investment to be expected. So when I look at the terms, this one has a bit of a complex situation here. Usually it'll just say this company is raising on a SAFE, which is a simple agreement for future equity.
Yeah.
That's very popular for technology startups. Other technology startups might raise using a priced round, which just means that they are selling equity in their business. They've set a valuation and you can buy shares in the business. Then when you get to small businesses, more traditional businesses, I should say, right? Such as this wine bar, you'll see more things like the debt rounds,
Mm.
right? So you'll either see things like a loan, right? A traditional loan where they're expected to pay you back the principal, which is however much you put in, plus interest, right? And they're
Mm.
going to set the interest rate. Or there are revenue share loans. So we actually raised on a revenue share loan, which means every time the company earns revenue, a percentage of that revenue goes towards repaying investors until they
Mm.
make some investment multiple back. Or you can see something like this, which I've actually not seen on Wefunder before. So this is new to me. You can do a profit share.
Mm.
So what Bad Idea is doing is they're offering Class A units at a purchase price of $1 a unit,
Mm.
and unit holders or investors will receive 75% of company net profits until their original investment is recouped. And then from there, Class A unit holders or investors
Mm.
thereafter will receive 25% of net profits in perpetuity. I am liking this.
Yeah.
I
Would
am
you like to
liking this.
break down what perpetuity means for the people?
Perpetuity, man. Listen, perpetuity to me, that sounds like keep it coming.
Yeah.
Keep it coming. So the company has formed a contract, right? They've written this
Mm-hmm.
custom contract for this investment round. And they said, all right, if you want to invest in us, here's what you can get.
Mm-hmm.
You can purchase units, right? Investment or ownership units in the
Mm-hmm.
business. When you own a unit, this is what we owe you. So 75% of net profits. All right. So the company has to go out, execute on its business model,
Mm-hmm.
make a profit. From that profit, 75% of the net profits are going to go towards repaying investors.
Mm-hmm.
Right. So if you invested the minimum, which is $100 here, the company is going to continue to operate its business until you get paid back your $100.
Mm.
Let's say that takes 3 years. Let's say it takes 3 years. I'm making up a number, but let's say it takes 3 years.
Okay.
Cool. Okay. So the company has paid you back your $100. Great. All right. I put some money in, I got it back. That's cool.
Mm-hmm.
But where's the fun in that? Like where's the growth? I want more. I want some more. I
Yeah.
got bills. I got a phone bill. I got rent to pay. I got people to pay. Come on.
Yeah.
We got to make some more money here. So Bad Idea is saying, all right, after we repay our investors, right, what they put in, investors will continue to earn a return on their investment through 25% of their net profit. So long as the business is operating their company, 25% of their net profits are going to go towards paying their investors, sort of like a dividend.
Yep. Nice. So under that, it says investor perks, and it has different types of Ks. What does that mean?
All right. This is what we call sweetening the pot. This is what we call sweetening the pot. So I want to say this. This is an investment.
Okay.
So, the perks are return on investment, right? That's the main perk.
Correct.
But through these platforms, you can add other things that sweeten the pot, make people want to invest larger amounts of money. So even though the minimum is $100, the company really wants you to invest more than that, right? So they set some perks to get you to invest a little bit more. Yeah. So you can, I think you just have to hover over it. Let's see.
About to say, what kind of perk is Edward getting down there for the two?
Right. I thought it showed it before. Maybe not.
Is that not it right there?
The contract.
Or is that just
no? It looks like it's saying the same thing. Oh, there we go. Okay, so looks like you just have to hover over a specific part. But okay, if you invest $1,000, you get an invitation to soft opening events. So we really haven't even gotten into what this business is.
Yeah, we're just looking at right now wine and food.
Yeah, and we know it's a wine bar.
They're doing perpetuity, and Edward's the man, is what we know.
That's right.
So far.
That's right. That's all we know right now. And if you are interested in investing more than the minimum, you can see, okay, if I invest $1,000, I get invited to the soft opening that they're going to have. If I invest $2,500, I'm on the VIP reservation list. 5,000 priority access to all events. 10,000 all perks above, plus a dinner for 4 people, alcohol excluded.
Yo, I'm dropping 10 bands and I can't even get alcohol.
You know what I mean? Like not a bottle, just a bottle, just one bottle.
What do you get alcohol? Like just say it won't be unlimited alcohol, but we can hit you with 1 or 2 bottles real quick. Like
right,
we ain't gonna leave you starving.
It is a wine bar, but anyway, so yeah, so all right, so that's all those are sort of the investment highlights.
Okay.
On the right side there, that's like you want to look at how much they've raised, what's the minimum, what are the terms, of course, like that's the most important thing. What are the terms? And then another thing I'm going to highlight, just as we're going to speed through this a little bit, but for this company to make this raise official, they have to file their documents with the SEC, the Securities and Exchange Commission, right? They have to make this an official solicitation of investments, and they are certifying that everything that they're telling you about this business is the truth, and that they are not doing anything illegal. They're not giving you financial information that's not accurate, and they're on the hook to repay you as an investor, right? So what I look for here, right, this line here, this sort of menu is like the different parts of the campaign that include different sort of types of information. So the overview is where you start. They're going to give you some highlights just about the company. Like this one saying, okay, the founders owned and operated the founder was a former wine director of Bastion and Henrietta Red. I don't know what those are, but I'm assuming if you're in
wine,
where even are they? East Nashville or into wine, you know what those things are. But yeah, typically they're going to give you some high level stats that get you excited. You're like, oh my goodness, they know what they're doing, right? But then as you scroll, you just get to learn more about the story. So I am looking for pictures, right? I do want to see like who's behind this, right? How are their marketing materials? So the founder, Alex Birch, is is talking all about themselves. And then you'll also see sort of their pitch deck, right? So they're starting to tell you, what is this business? So this business is about celebrating wine exploration and education, and Bad Idea boasts an eclectic and lively wine selection complemented by fresh and inventive fare. Okay, cool. But anyway, you keep scrolling, see all about what they're doing. They're giving you their menu here. And to be honest with you, I'm looking for like a pitch deck. This isn't exactly a pitch deck,
Yeah.
right? Where they talk about like their marketing strategy and all that kind of stuff. It might be in here, but the format is a little different. They're giving you their floor plan, right? Like this looks like some kind of like rendering of what the space is going to look like, which is cool. This is all cool, but I would have to do some deeper digging just to see, okay, how is this going to work? But looking at the floor plan, I'm like, this is a big space.
Yeah.
All right. But yeah, it looks cool. They give you their financial projections, which are very important. And it is a restaurant type of thing. So it is expensive to operate. It looks like, I mean, total expenses are coming in at almost 1.5 million.
It's a hefty amount.
Hefty amount. But anyway, all right. So I look for all of that. But I want to share this one last piece. What I'm really looking for, before taking this campaign seriously, is making sure that this menu here, this horizontal menu, has the details section. If it has the details section, that means that they have provided their financials. On the back end, they had to upload their GAAP financials, their sort of high-level financial overview, right? The performance of their business to date. If they've not submitted their financials, that means they've not filed their official paperwork. So this raise is not an official raise if it doesn't include what I'm currently showing on the screen. So, okay, we can see their financials. So they have done that. Great. However, we can clearly see this is a brand new business. Or at least, the story is telling us it's a brand new business. It looks like they started it in 2021, and they've already started sort of raising some money and operating something, right? We don't know what their expenses are right now, but it's a startup. It has startup costs. We get that. But I want to look at this. When I land on a campaign, I want to see their financials, and I'm looking for this first one here. I'm looking for revenue right now. That's what I'm really focused on. Like, if it's a profit share, yes, we're talking about cash flow. If you're saying you're going to pay me back through a profit share or through a revenue share, where's the revenue? That's what I'm looking for. So right now, this one has none, right? But it's a startup. So that is another risk you have to analyze for yourself. But that's what I'm looking for.
Okay.
Yes, sir.
Got you. So after you've checked these points, where are you going next with it?
Oh man, there's so much. We're gonna have to cover this in another episode. But I mean,
stay tuned.
Yeah, stay tuned. Look at I skip past what people say. Typically, what people say are like testimonials from people that they know and love them, and those are great. Those do help founders raise. But no, I know that's all going to be positive stuff. I want to go to the ask a question section, the Q&A. Yes, I want to see what are people asking, because they're asking questions that I haven't even thought of yet.
Yeah.
And one, I'm like, ooh, that's a good question. I want to know the answer, but I also want to see how the founder answers the question. Sometimes you'll see people respond in like an aggressive way.
Yeah.
And I don't like that. I want to invest in nice people. I want to invest in people that treat other people nicely. And even if, look, we just raised, we had questions, but you can't come on here acting a fool. Right? Because
why don't you like my idea?
Right. If you see them talking about, oh, well, just keep your money then, that's not how you should go about this. But no, I look at all of that stuff. So there's a lot of information to think about. But from what I've seen so far, I'm like, this seems cool. I want to learn more about the business itself. I do like the idea of the terms. So I want to do some more digging. Yeah, that's where I'm at. That's where I'm at with Bad Idea.
So Bad Idea is a decent idea.
I will say shout out to Bad Idea for the dope marketing. I think their opening image is very enticing and attractive.
Mhm.
And then I love the fact that they have a custom contract. They didn't just take sort of what Wefunder has to offer,
Mhm.
right? They came up with a profit share agreement. I think that's pretty cool. So
Nice.
again, I want to learn more. This is not an endorsement, a recommendation to invest in it. But if you want to check it out, wefunder.com/bad idea. Thanks for tuning in, everyone. We will be back live next week, Thursday, from 7 to 8 p.m. Eastern Time around the herd. Be sure to visit www.bv.partners to join our newsletter and to stay up to date with all of the amazing things we have in store.